Very good afternoon and welcome to Midcap Radar. I'm Ekta Batra and with me is Sonal Bhutra. Well, it's turning out to be a session where we are steady at this point in time. We have the mid-caps which are up around 0.7%. We have the Bank Nifty which is up around 1% as well. And there's a medley of stocks from different sectors which are gaining today. So Shree Cement is your top gainer on the Nifty. That one is up around 2% HDFC Life is up around 1.5% and even something like a Kotak Mahindra Bank which is doing well. Hindalco from the metal space gaining as well. But a lot of action in the broader markets too.
Yes. As you mentioned, the mid-cap index is up around 0.7%. The advance decline ratio comfortably in favor of the advances. And of course, it's the expiry day as well, the monthly expiry. So the last 1 hour of trading action is something which will be very, very crucial. We'll do one thing. We'll start the show with the top headlines and discuss all the individual stories. Market edge is higher, led by realty and financials, while IT stocks drag. Mid-caps outperform.
PSP Projects jumps on orders worth nearly 250 crores, which they've procured. The company bagged a 143 crore order from L&T, the largest. CMD and CEO PS Patel tell CNBC-TV18 it is adding that it will maintain its order book target for FY23.
Mid-cap fertilizer names like RCF and Deepak Fertilizer gain even as the government directs fertilizer producers to ensure 2/3 of all fertilizer bags have the centre's Bharat branding from 2nd October. The move will leave 1/3 space for corporate branding.
RBL Bank surges for a second day on a large block deal. The College Retirement Fund buys around 50 crores worth of shares of the lender in yesterday's session.
All right, those are the top headlines that we are tracking. The markets, they continue to edge higher, up around 98 points on the Nifty as we speak. But it is a good time to look at some companies in the broader markets as well. So let's go straight to War Lubricants, the stock which has gained nearly 10% so far this month. And this comes even as we are seeing oil prices edge higher. But that is also because the company reported solid revenue growth in Q1 and the numbers looked really strong. Ravi Chawla, the Managing Director and CEO of War Lubricants, is joining us now to discuss the business outlook and the ideas going forward as well. Mr. Chawla, good afternoon. Always a pleasure speaking with you. Q1 was a strong quarter for you. This despite the fact that we saw a lot of raw material and price inflation, and that has continued to a bit in Q2 as well. We are seeing that base oil prices, they have recovered from the lows. We are seeing more buying in crude oil per se. Do you think the momentum that you maintain in margins will continue? You will see an increase. You had guided for around 14 to 16%. Does that stay? Do you have enough space to pass on the price hikes?
Well, we have passed on the price hikes in the retail segment, the B2C segment, but definitely on B2B, it will have a bit of a lag time. And we see that the range of, we got 12% margin last quarter, and we are looking at a 14-16% by Q3. So I would say that demand conditions are very good. We had a very good quarter ending June. Hopefully the prices will remain stable, but yes, they are at the moment. There is obviously base oils have a lag time to the crude, but Q3 we probably see a good margin coming in.
Okay, Q3 you see a good margin coming in. You did mention demand and your revenue was over 700 crores in the previous quarter. So can you share, Mr. Chawla, what the quarterly run rate in terms of sales would probably be for you? Any kind of visibility and any kind of numbers you can share with us?
See, normally we grow double digit about 2 to 3x the market, which this year we expect will be about 3 to 4% growth. And quarter-wise, March is a very strong quarter because a lot of the distributor schemes and it's a year end. April, May, June again is a good quarter in terms of consumption, and that's done well for us also, 34,000 KL. And generally July, August, September, it's a monsoon season, so slightly tepid demand because of monsoons. But we would continue our growth rate. Of course, April, May, June last year was low because of the markets being closed. And therefore, the growth and revenue is very good. But we still have grown over the last quarter also by 3%, the March quarter, the June versus March. So we see very good demand conditions, except I would say the motorcycle segment where there is a bit of challenge. All the other segments are doing very well, including the B2B industrial and OEM. They have really picked up. And I think that's a good sign for us and the industry.
Okay, so the growth that you're talking about, will it be volume-led largely or will it be realization-led as well? And what about synthetics? You were expecting more growth in this particular segment. Right now, it's contributing in around single digits. How much can you scale it up to?
Well, you see, synthetics. We have a range of synthetics in our motorcycle oils, our car oils. So there is a focus on that, and there are high-end oils also with the BS6 and other things happening. So we would like to obviously take it close to double digit and see how we can do that. And that will take obviously a lot of distribution increase, product range, of course, we have. And I think that is the way to go. And overall, in terms of demand, definitely all our segments, as I mentioned, we are increasing our distribution touch points in B2C, for example, by 25%. We're trying to do this because obviously 2 years, a lot of the touch points had closed down, but they are bouncing back. So a lot of a focus on our B2C segment, synthetics, and even B2B we see as a good traction with our industrial customers and our OEM customers.
Okay, all right. So B2C is where you're probably focusing your energies on in terms of setting up distribution points. And in terms of CapEx, you are looking at some amount of CapEx when it comes to EVs. You did invest in a company in the UK when it comes to charging infrastructure. You have made inroads within that space. Tell us where things stand. What can we expect for this remaining part of the fiscal?
Definitely our investment with Indra Renewables, which is a UK-based company into home chargers for cars. We have done the pilot test of the chargers. We're looking to localize it and also look at some imports to start with. So we are talking to some of the OEMs. We will shortly announce, hopefully we can get the charger into India. We've also made an investment in Electrify, which is a software as a service company, and we are supporting them to grow. So both these aspects are there, and we're also studying the other parts of the EV value chain where Gulf as a brand in India and globally can play. Basically in India, our brand, our distribution, and our OEM relationships, how we can leverage. So there is a study which we are doing, which will hopefully outline what we can do. But these two investments, we are currently trying to grow with them, and strategically, these are strategic investments for us.
Okay, so generally, if we look at the EV contribution in general, here you're making investments, but do you think they'll start showing in your revenues as well? Will this be a bigger part of your overall portfolio, say 2 to 3 years down the line? And if yes, what would the initial contribution be?
Well, the core lubricants which we are doing today, there is going to be no degrowth in core lubricants for the next 15 to 20 years for sure, even though EV penetration figures are there in two-wheeler, three-wheelers, and something in cars. So we continue to grow in our core lubricants. EV as a stream, these are strategic investments. As we look at it, it's not going to be significant, but we also have a range of EV fluids which we have launched globally. But the EV market is so small that it's not going to be a large volume, but we are already talking to some OEMs for the EV fluids. So I guess it is going to be a small part of the revenue in the next 2 to 3 years, but definitely strategically we have to look where we can play in the EV landscape as we see it evolve, and it will evolve quite fast in India now.
That's exactly, Mr. Chawla, which I wanted to ask you. I know from a 2 to 3 year perspective, maybe EVs is not going to be that big a contributor, and India is really just about starting its journey there. But when it comes to maybe a larger company focus, a strategic company focus, if we were to have this conversation, say 5 years down the line, how much do you think EVs would probably be contributing to total sales? Have you had conversations internally that you're probably going to shift your focus from your core business and maybe focus on newer businesses such as EV?
Well, you see, for us, the portfolio of two-wheeler oils, that is one part which is there. The rest of the portfolio is not going to, whether you take commercial vehicles, tractor, industrial, even some of the other segments which we have, those are not going to be impacted by EV. So we continue to look at our core growth. And if you talk about the share in EV, where in EV we are going to play with our brand, our distribution strengths, and our B2B contacts and our strengths, I think that needs to be clear. And then we can say what part of the EV value chain. Regarding EV fluids, definitely we are going to see a multiple increase in that, but still it's going to be very, very small. Not even, I would say, low single digit in terms of the volume per se. Of course, we'll have to wait and watch, but at the current predictions on EV, it will be a very low single digit in terms of consumption of EV fluids.
Okay, so that is about the EV strategy. In your current business, you said you are planning to increase the distribution points to B2C business by 25%. What is the current number? How much can you scale it up to? And generally, all the expansion plans that you're talking about, maybe making inroads in other segments, what capex would that entail, and what would that do to your debt?
Yeah, so our capex is not really going to be high, and the way we have currently positioned, the capex is going to be just the standard capex for capacity utilization as we look at it. So not really going to be high in that form. The new capex will be after 2-3 years when we want to enhance some capacities. So nothing really which we look at happening in a big way. If we do plan new businesses, then we would have to look at additional capex.
Okay, all right, Mr. Chawla, thanks a lot for joining us and giving us all those details. So that's the word coming in from Gulf War Lubricants. They continue to maintain their guidance of 14 to 16% margins and a double-digit growth, where they expect to beat market growth yet again. The stock is up around 1.2% at that 462 mark. With that, we'll slip into a short break now. Up next, we'll have Ruchit Jain for a quick technical check on the market. Stay tuned. Hi, welcome back. You're still tuned into Midcap Radar on CNBC TV18. Well, good going for the markets today, and it's also the monthly expiry day today, so it's a good time to get a technical check on the markets. Ruchit Jain of 5paisa.com is joining us now. Ruchit, good afternoon. Thanks a lot for joining us. Well, the question is whether we'll continue with the gains that we are seeing, or last 1 hour of trade, we'll see some volatility. What are the charts suggesting?
Well, hi, very good afternoon. Well, if you see technically, recently we had seen a sharp correction in 3 trading sessions from that 18,000 high to 17,350. And primarily this move from that 17,350 just seemed to be a pullback move, which is retracing that corrective part. And 61.8% retracement for Nifty of this previous correction is placed around 17,740 to 750. So I think the upside from here on for market seems to be very limited. Once the market completes this pullback move towards that 17,750, and we are almost there. So I think then market should again resume a bit momentum on the downside. So we are not aggressively advising our clients to go long at current levels. Rather, I think just take a stock-specific approach over here, because we are witnessing good momentum in the broader markets, in the mid-cap and some of the small-cap names. But on the index front, the upside seems to be very limited. Around this 17,700, 17,750, one should in fact look to book out the index-specific long positions.
Okay, all right. Any specific stocks?
Yeah, I have a couple of recommendations. First is a buy call in Crompton. Well, as I said, there is more stock-specific momentum now, which could continue. So Crompton Consumer has given a breakout from a consolidation phase and has resumed that high top, high bottom structure on the daily as well as the weekly charts. So the broader trend has been positive in the stock, and it's just a resumption of the uptrend which has been seen today. So short-term traders can go long with stock below 390 for potential target around 445. And another pick would be a buy call in Aditya Birla Capital. Well, a similar breakout has been seen in Aditya Birla Capital as well. High top, high bottom structure, a falling trend line resistance breakout was recently seen. So 109, the support base has been now shifted to 109. So keeping a stock below 109, one can trade with a positive bias for potential targets towards 127.
Okay, all right, Ruchit, thanks a lot for joining us and taking us through your technical bets. With that, we move on. The mid-cap space is doing really well today. So in our segment Mid-Cap Movers, we have Sonia with us to take us through all the mid-caps that are buzzing around in trade. Hey, Sonia.
Hi, thanks for that. So today was a problem of plenty. There are so many stocks rising. So I thought, let me start with the 52-week highs. You have a lot of banking stocks on that list. There's Bank of Baroda, Federal Bank, there's REC, Phoenix Mills that has hit a fresh 52-week high as well. Let's move on to the mid-cap, the capital goods stocks which are surging. So you have names like BHEL, there's Thermax, there's Siemens, ABB India. Now, a lot of these stocks like Thermax, Siemens, etc. have hit fresh 52-week highs. So I'm watching out for these for sure. Apart from that, banks are on the move. So big moves seen over there. Indian Bank, Central Bank of India, IDBI Bank and PNB all are moving both with respect to volume as well as price action. So this is also a space that I'm looking at. And finally, talking about volume buzzers, big moves coming into names like India Mart, Route Mobile, where the management was very confident on our channel a while back, Crompton Consumer and United Spirits, all of these stocks looking pretty sprightly in trade.
Okay, all right, Sonia. Thanks very much for that. We need to take a short break. But a quick reminder for our viewers as we do that, it's that time of the year again. Money Control Pro's financial freedom offer is back with added benefits. Welcome back. Well, for the mid-cap index, it's holding with a gain of around 0.7%, so doing well at this point in time. Just watch out for a couple of stocks such as Nava. So that stock is down around 10% at this point. On a week-to-date basis, it's lost around 10%, but still on a year-to-date basis, it's quite a strong outperformer. So just about giving up a little bit of that 100% return that it's already notched up on a year-to-date basis. But let's focus on our mid-cap spotlight segment. Sonal, will focus on Time Technoplast, which is another stock which in fact has hit a 52-week high today. Sonal.
You know, as Sonia said, there was a problem of plenty today on which stock to really focus. So I'm talking about Time Technoplast today. It's up 11%. It's a plastic pipes company which is into industrial packaging and the likes, and it is up 11.5% today. It is at a 52-week high and 18% since earnings. Revenue growth was strong for the company in Q1, up 25%, EBITDA up 23%, and margins were just down 30 basis points, despite the fact that the plastic polymer industry saw a big rise in raw material prices, leading to a profit growth of 56%. The other thing that moved the stock is because the company actually announced overseas business restructuring, and they said that they are looking at divesting their majority stake to an investor, a strategic partner as well. And the proceeds that will come by will be used for repayment of debt, capex for composite cylinders, and the core business as well. Company in its Q1 earnings call also said that now raw material prices, they are normalizing because demand supply situation is normal, and also in the next 12 to 18 months the capex program that will come in, it will add up to 1 million LPG cylinder capacity. That of course is dependent on demand, but for now demand according to them is quite stable, and that is one of the reasons why stock has seen a good run post its earnings as well, and of course is doing well today in trade as well.
Okay, all right, Sonal, that's on Time Technoplast. That stock at a 52-week high, but another stock is at a 52-week high. We spoke about this earlier in the morning as well. Asahi India. Sonia's tracking this. Sonia, tell us more.
So Asahi India is a big beneficiary of the rising auto demand and the surge in new vehicles that have come on board. In fact, the stock is at a fresh 52-week high today. It's up about 33% in 2022. And its market cap has now hit 15,000 crores. Now, why is it a proxy for the auto segment? It's because Asahi India manufactures glass and windows for auto and the construction industry. Now, Asahi India enjoys 74% market share in the passenger vehicle industry. So all your cars, you know, whether it's the Mahindras, the Maruti, Toyotas, you have Ashok Leyland, all of these window panes and glass is all made by Asahi India. They've supplied glass recently, in fact, to a lot of the new launches as well, whether it's the Kia Carens, the Volkswagen Taycan, the Skoda Kushaq, even in the two-wheeler space. Now, they manufacture glass not just for autos, they do it for 4 industries: autos, building and construction, consumer, as well as industrial. And they have a very strong presence in architectural glass, which is used in all your building panes. Now, they're the second largest manufacturer of float glass in India, and they have a 17% market share in the domestic architectural glass segment. The other thing is that the earnings for this company have been very good. So if you look at the last quarter in Q1, the revenues went up 53% year on year. The profits went up over 200%. Of course, it was on a low base, but just the fact that there are a slew of new launches coming in, especially in the electric vehicle space, in the passenger vehicle market, Asahi India could continue to be a big beneficiary of this theme. Back to you.
Okay, that is some interesting information. Sonia, thanks a lot for joining us and taking us through what's working for Asahi India as of now. But it is a second day of gains for RBL Bank. The stock is rallying on the back of a large block deal. Nimesh is joining us to tell us more. Nimesh?
Yesterday, everybody was surprised with the kind of move we saw. Intraday, the stock was up 20-odd%. Even today, the stock is up 7-odd%. Now, yesterday, post-market, there was a disclosure of on the block deal data that suggested that the college retirement fund did buy 45 lakh shares at an average price of 108, which works out to close to 50 crores of worth of RBL stake that they've bought in yesterday via block deal. Now, I was just looking at this particular fund. It's a large fund globally. It's one of the big funds of the US. And globally, they manage, in terms of asset under management, they manage over $1 trillion. So it's a large fund. And maybe that's why, the stock is reacted positively. Remember, today is the expiry, but the stock is in F&O band. So, bit of covering. Maybe, for the last couple of days, apart from this buying interest, there could be some bit of short covering as well. What has done is this particular deal and the interest of a large fund buying into RBL Bank has led to a bit of a rub-off in the other private bank names, small private bank names as well. So, for the last couple of days, most of the stocks are buzzing. But for RBL, there was a disclosure last evening that college retirement fund did buy 45 lakh shares, investing close to 50 crores in RBL Bank.
Okay, all right, Nimesh. Thanks very much for that. Yes, definitely RBL Bank buzzing in today's trading session has notched up quite a significant amount of gains in the past couple of days. But let's move on then. New packaging rules for fertilizer companies. The government orders fertilizer companies to ensure 2/3 of the fertilizer bags use the Bharat logo. 1/3 can carry fertilizer company's name and logo. Sonal, tell us more. It's interesting. Give us a sense in terms of what this means, and I doubt it has any impact on the stock.
Oh, it does not. It does not have any impact because still the companies can put out their logo and packaging on that particular bag. But yes, it is an interesting update that has come through, right, in the fertilizer segment. They have released new packaging rules, and the government says they will implement one nation, one fertilizer scheme by introducing single brand for all the fertilizers, be it the private sector or the public sector. And as you mentioned, 2/3 of the single brand will be like Bharat Urea, Bharat DAP, Bharat MOP. So all the fertilizers will have Bharat attached to their name. 2/3 of the fertilizer bag will be used for new brand name and logo of fertilizer subsidy scheme, and 1/3 will be used by the company which is actually producing that fertilizer for company's logo and other information. Now they say it should phase out gradually from 15 September. It will be applicable on 2nd of October, and generally not a big impact that it is having on all these companies. Just that the long-term demand scenario and the distribution for these companies is still strong, so no negative impact on any of the listed space as well.
Okay, all right, Sonal, thanks very much for that. Maybe the fear was that they'll all become largely genericized, and hence, their sales could probably be impacted on a larger level. But still, the companies do manage to have their logos on the packaging. But earlier today, we did speak with Rajdeep Kumar Gupta, the MD and Group CEO and promoter at Route Mobile. He expects the company to achieve 50% revenue growth. Let's listen in to what the company had to tell us.
The large volume coming from Africa, it might create a little bit issue of price decrease on price per transaction. But I think we are well on track as compared to what we achieved in last quarter, and whatever the guidance we have given to the market that we will overachieve 50% target. We have our internal aspiration to grow our GP somewhere between 25 to 30% in coming quarters. And we are looking forward for that, and we are working towards that. So I think we are still guiding between 11.5 to 12.5% as of now, and between next few years, probably we are aiming to grow that to 14 to 15%. But as of now, if you talk about the guidance, anything between 11.5 to 12.5% is something that we are targeting right now.
All right, that's the word coming in from Route Mobile. The stock is up 5.5% in trade today. And with that, we'll wrap on this edition of Midcap Radar. From Ekta, myself, and the entire team, thanks a lot for joining us. Mutual Fund Corner when we return.